Is Tom Lee. Thank
Tom
you
Lee.
for being here, Tom Lee. I don't even know if you need an introduction at this point. People tune in to hear. Sometimes it's almost like a salve.
Hi, stock investors. JJ here. Welcome back. Well, Tom Lee again. I know I've had him on here, reacting to him quite often lately, and that's because exactly why he said he's become very popular. He's made these predictions, and they've been fairly accurate. And as I keep saying, people make predictions like this, and they can have a good run, but it's impossible to predict the stock market on an ongoing basis. I can't repeat that enough, but it's entertaining to see. And I like what Tom Lee is saying because he's predicting that small caps will go up. He's saying 15% the small cap index will go up in August, 15% in August. He may well be right. He may not be. I'm happy to take the gains in my predominantly small cap portfolio. I'd be happy with that. But anyway, let's see what Tom Lee's got to say, the detail of what he's got to say here.
And I think you're going to give us a little bit of that today for our wounds from yesterday, but not entirely, because you think the S&P is probably going to be flat for August overall.
Yes, that's right.
And that's unlike some of your recent calls about the S&P with friendlier inflation data. You've made some calls about some big near-term moves. That's not what you're saying today, unless you're talking about small caps.
Yes, that's right.
Okay, so he has made these claims before recently, and I have documented them that, you know, he's talking about NVIDIA and those big cap stocks will do well. So he's changed his mind. Just shows you that predictions, okay, is he right or wrong? If you make predictions both ways, maybe you'll be right because you've made predictions both ways.
I think part of what we saw yesterday was, you know, the rotation that's painful away from large caps. And I think Tesla earnings and Google sort of accelerated some of that.
Sure.
And I think there's been some uncertainty about the Fed's commitment to cutting, even though we expect inflation to fall like a rock. But when the Fed starts cutting, that's good for small caps. And there has been, I think, overseas some unwind of that Japan carry trade that's hurt the NASDAQ. Mm-hmm. But to me, this is why the S&P had a great first 6 months. Maybe it needs to consolidate those gains.
Okay, let's just stop there and check that out. So let's just look at today. First of all, as I speak here, the NASDAQ has had not a great day. Well, the mega caps in particular, Microsoft down nearly 2.5%, NVIDIA down another 1.72%. So that's had a massive gain, of course, this year and last as well. And Apple's even down. Google, Tesla making a bit of a comeback today, but as he talked about there, Google and Tesla earnings coming out, and there was expectations of more. But if we look at the indices, I want to just check this out. I noticed here now, going back 6 months already, we can see here that the Russell 2000 has actually caught up. It's caught up to the other indices. So Russell 2000 is up 12.51%. The S&P 500 is up 10.32%, and the Nasdaq's up 10.77%. So now, over the last 6 months, outperforming the major indices. But if we go back year to date, it's still got some work to do. But look at that. The convergence, definitely a convergence happening there. Will it continue? Some say yes, some say no. And obviously, Tom Lee says yes. He says he has said before that there'll be 50% gain this year, and it looks like his call's been right. So as they said on this program, he's become very popular, and I guess I'm adding to that, putting it on YouTube. There's other people on YouTube saying who's saying Tom Lee's great and he's right and he's always right. But as I said, I'm not that way with predictions.
But now Russell 2000 has an 11 median PE. Earnings growth 800 basis points faster, and it just posted 11 days where 10 out of 11 days had a 1% move. The 9 times it did that since 1979, when you weren't in a bear market, we were up 100% 1 month, 3 months, 6 months, 12 months later. 12-month average gain 40%.
You're very popular. And I would
keep saying that. He's very popular because people like to have predictions that come true, and they think that they can predict the stock market.
Warn you, this is not good that you're saying this. You think this rotation has been driven by expectations of a Trump White House? Is there another way you can say that? Can you come up with something else so you don't have to delve into the political side? You think Trump's going to win the White House, or you think the market at this point thinks he's going to win the White House?
Yes, it's the second.
Okay.
Betting markets are putting a 65% probability of a Trump White House. The biggest beneficiary, which is deregulation, M&A, regional banks doing better, that's small cap stocks.
Okay, so that's the linkage that you're seeing then. So you really think...
On the political thing there, I mean, the stock market, over the long term, if you look at history, the president doesn't really matter, but the market does, think that Trump... Obviously, think that there's a certainty, but it's probably more about certainty. I wouldn't speak too soon myself. I think if Kamala gets in, there's still months to go. As I said before, other countries have these tight windows of election campaigns of weeks, like 6 to 8 weeks, and so it can turn around if Kamala comes out, if she's the candidate, and there's still a long way to go, and it wouldn't necessarily be bad for the market.
We've seen a Trump trade, and even after, the betting markets have moved somewhat. He's come down. Vice President Kamala Harris has moved up a little in the betting markets since the weekend when the news came out. You still think that that's at play from here on, not just to explain the rotation that we've already seen? You think it's going to continue? That's
right. So I think it's from this point forward, there's a lot of opportunity in small caps. Part of it is that there's a lot of overlap. When the Fed cuts, that's lowering cost of money. That's good for small caps and the regional banks. It probably boosts CEO confidence, which is M&A, and that benefits small caps. So there's a lot of overlap between a Fed cut imminent and a Trump White House, and that's why I think the interplay is positive for small caps.
Sure, that seemed to be the catalyst for it. When there was soft inflation and in the Trump trade, it sort of seemed to accelerate the small caps, going up here. And as I said, I wouldn't mind with my portfolio is full of small caps and mid caps rather than large caps. So I'm liking what's going on here. So, this year it's beating the S&P 500 by quite a wide margin. So I'm really happy about that. Really, if it keeps going, that'd be great. Speaking about portfolio, I want to say here I'm excited to partner with ShareSite as an affiliate, where you can track your portfolio. I track my portfolio. I use it. I wouldn't recommend anything that I don't use myself. So it's a tracking and reporting tool. You can actually sign up for free here, but there's a special offer for the premium. If you go to this page, I'll put a link in the description to this to go and check it out. You can say swap your investment spreadsheet for ShareSite, and that's definitely what you do here. I've got 2 brokers, so I can bring it all into one place and play around with lots of metrics there, see exactly the true performance of the portfolios. This is where you can track your performance over any period, visualize your portfolio diversity, track your investment income, and calculate your realized gains. And it includes dividends and everything. A really good tool. I've been at it for a long time, and it's respected and trusted by 400,000 investors worldwide. So I do encourage you to go and take a look at that in the description area. As I said, there'll be a link there to a referral link to that. Let's get back to Tom Lee.
So I still don't understand. You don't think the large caps are done. You just think it's a slowdown for the S&P 500 on a broader level?
Yes, that's right. I think the Mag 7 was very attractive at the start of this year because growth was scarce and they've had great visibility. And they're not expensive. 27 times earnings isn't demanding. But now that there's a visible catalyst for small caps, I think
27 times earnings it's not cheap either.
Investors are taking some profits up. NASDAQ was up 20% and putting it into small caps.
We were talking earlier, though, just about the Mag 7 in particular and the spending on the cloud. If Alphabet's results are indicative of what we might hear from Microsoft and Amazon next week when it comes to the cloud, where they are spending a lot more than they're able to bring in at this point, is that a problem? Is that because it feels like there's a little bit of a sentiment shift too.
Yeah.
Even if it's a brief one and early on.
I agree. I think perception is really important for equity valuations, but the money spent by these companies on AI has a high expected return because they have moats that are getting stronger, and there aren't companies like this anywhere else in the world, so they're very scarce. So I don't think it's wasted capital, but if investors want free cash flow or if they see 11 PE stocks and small caps, that's what's becoming incrementally attractive.
I can see what he means there, that these big mega caps have put so much into AI, big spending, big capex, and investors want to see a return on that. That was part of the Google, earnings that came out below expectation, because people do want to see some return on AI investment. They sort of almost ignore the other good stuff in there, so they want to see that. And OpenAI just today has said they're coming out with a search, a search tool, a search engine that could disrupt Google, possibly. That's up. I can't say one way or the other. And this is not investment advice anyway. I'm not saying buy or sell anything. Small caps, large caps. It's not. This is just for entertainment purposes, and this is entertainment because, and general education too. But Tom Lee definitely tries to predict, and that's entertaining. But at some point, he's not going to be correct. He might have a good run. He's already changing his mind on these big caps. Where just a couple of weeks ago, he was saying that they're still a good trade, and they've been plummeting ever since, really.
So a flat S&P.
So he's kind of saying that everything would be good, and there'd be a broadening out. But now I think he's changing his tune a little bit.
A Russell or a small cap gain of 15% in the month.
Yes,
possibly.
That's right. I think for the month of August, small caps can do something more than 15% even, because they've underperformed so dramatically. And the type of move we've seen just in the last 2 weeks is something that only happens at the start of a pretty significant advance for small caps.
Do you think that the earnings that we see for the big caps, will they continue to confirm your case that maybe could anyone blow their results out of the water and change this for big caps and say, wow, we're wrong, things are still okay, so that it doesn't? Because yesterday was 600, whatever it was, 600 plus points. It had a lot to do with earnings. Not completely. It seemed like it was ready to happen anyway. But do you think there will be any surprises that are better than people thought in that group?
I think so. I mean, at the end of the day, I don't think these companies are not capable of positive surprise. A lot of good news was baked in. The line in the sand ultimately will be NVIDIA when they report, which is really the last.
People were so nervous about NVIDIA last time, and this time maybe even more so, to see if it's going to continue, see if these large cap companies are keeping on buying. I mean, it has come down. It's going to be interesting to see that if NVIDIA can keep the AI trade going. The multiples have gone up with these companies.
I think over the next 10 years, the outlook is still really good for all these companies. So I don't think investors should lose faith, but profit taking kind of makes sense.
That's okay, great. I think we can continue.
So that's definitely changed his tune from what he was saying a couple of weeks ago, where he said that you have to own these stocks. I guess it's not, it's not exactly the opposite, but it does seem to have changed his tune on predicting. People will ignore that, I suppose. All right, so that's what Tom Lee's got to say there. Big prediction, very popular, as he said, a kind of a salve, Tom Lee, the lotion. All right, so I'm going to put on screen now a link to what YouTube thinks that you should watch next if you're on YouTube, and hides people on Spotify. That's also a popular platform for my content. So I'm happy to have you there. Good to see you there. But I'm going to put a link on the screen for you people on YouTube to what YouTube thinks that you should watch next, and also a subscribe link to this channel. And don't forget the share site link in the description to go and check that out. And I'll see you in the next one.